For the last 2 months, we've said, oh my gosh, look at gold. It goes up $100 every day. Oh my gosh, another new high. Oh my gosh, another new high. Look at it on a log graph. It is, I won't say insignificant, but it is a small rally relative to 2010-11 and 1979-1980. So relative to the previous blow-off tops, this is a meaningless rally. We only look at it in a log graph. That's what we should always do, because that tells us what the percentage gains are, which is what's important. Bottom line, I don't think this is a top. I don't think this is anywhere near a top. 3 Fed members came out the following day and said that they didn't want a December hike, just reinforce the fact that it's a divided Fed. So that was one big message, that the December cut is not a foregone conclusion. I frankly thought we would get a December one, and I thought the October one was a question mark.
Adrian Day, a respected money manager and recognized authority in global and resource investing, recently shared his perspective on the precious metals market, arguing that the latest pullback in gold and silver is not the start of a collapse, but a healthy correction within a much larger ongoing bull market. The long-term case for gold remains robust, as he believes the market is still in its early innings and lacks the public speculative mania typically seen at a peak. For months, global central banks have continued their trend of reducing U.S. dollar exposure, which provides consistent underlying support for long-term gold demand. In terms of recent market action, gold prices have slipped from their recent highs due to several short-term pressures. A stronger U.S. dollar and hawkish signals from the Federal Reserve regarding the pace of potential interest rate cuts dampened investor expectations, leading to profit-taking. Silver, however, has shown more resilience. The metal is finding a stronger floor of support from growing industrial demand, particularly in electronics and the surging renewable energy sector, such as solar panels. Despite the volatility, structural factors like geopolitical uncertainty and central bank accumulation suggest that the multi-year uptrend for both metals remains firmly intact. If you value foresight over fear, make sure to like, share, and subscribe to the channel, where truth, timing, and precious metals meet.
Gold just ran up far too fast, particularly, since August. I mean, frankly, even if you look back at the last 2 years, it's been an extraordinary run for gold, but particularly in August and September, October, gold just moved too far too fast. And you were beginning to see some sort of indications that we were going to have a temporary top. But personally, I just don't think it's anything to be overly concerned about. Of course, when you look at your statement and it's down 15% from what it was, a month ago, that is of concern. I don't think it's going to be a very shallow, I don't think it's going to be a very deep correction, but it's clearly, not clearly, but it's probably going to last, it could easily last a couple of months. But I say all that because, first of all, you have to look, is this a top? That's the fundamental question, have we seen the top? And I think we are so far from a top, and there is just no evidence. When you're at a top, you get huge public participation. You get a manic feel. So you hear about gold at dinner parties. You hear about gold on CNBC every night. There's massive inflows into the gold funds. We haven't seen any of that. So I think we're so far from a top. Compare it with 2011 or 1980, where you could see massive inflows coming in at the top. We're not there yet at all.
So what would be the trigger for the next move up in the gold price in that case?
I think the Western investor typically will move into gold when the economic environment, when the economic factors favor gold. The North American investor, unlike central banks, unlike Chinese investors, Asian investors, Middle East investors, and even European investors, we have no real experience of gold being really valuable as an asset of last resort. In Germany, they still think about the Weimar Republic and the runaway inflation. Nobody alive today lived through it, but they still think about it. Their grandparents told them about it. Same with Italy, same with France. And of course, Hong Kong, people who fled from China carrying their gold to enable them to start life again. We just don't have that kind of experience in the U.S. And so in the U.S., people typically, they say they buy some gold for insurance, right? But it's just not in the DNA. Typically, people in the U.S. buy gold as an investment when the economic environment is correct, is right. And what that means is a weakening economy, low and declining interest rates, high and rising inflation, and a weak dollar. And until recently, the narrative, at least, the narrative, if not the reality, has been completely the opposite of that. And so if you think back a year with a strong economy and a strong labor market, solid, Jerome Powell told us, inflation coming down dramatically, and the dollar reasonably strong, that was not conducive to buying gold. So I think what the trigger might be next time is one of two things. Either the stock market rolling over so people with profits in NVIDIA and Microsoft start to look for somewhere else to put their money, or it could be a pickup in inflation, because people think of gold as an inflation hedge. You ask 100 people in the street, they'll say, oh, well, gold is a good inflation hedge. We can debate that, but that's what will make people buy gold, I think. I think if you've got an investor who's got a good gold portfolio, maybe they sold a little bit last month, so they have a little bit of cash, I don't think that person needs to be in any rush to spend the last dollar that they've got. Or if you're a conservative investor and you've allocated 20% to gold and you did sell some and you're now at 17 or 16, no rush to invest those last percentage points of allocation for two reasons. One is, unless you sold everything, you've still got more money in gold today than you did a year ago, right? If you sold 20%, 30%, you've still got more in gold today than you did at the beginning of the year. So you've got a good allocation. And the truth is, we never know when these markets will drop. I think it's always a good idea to have some money in reserve, either for a broad decline or, frankly, for a specific stock decline. Something happens to the stock, it's temporary. If you've got the money, you follow the stock, you know you want it, and something happens, you can just go in and buy it immediately. You don't have to say, oh, let's see, what should I sell? Oh, do I want to sell this or oh, I've missed it, it's gone up. So it's always a good idea to have some cash in reserve. Just don't let this correction spook you. It's perfectly normal in the middle of a bull market to have a significant correction. This really isn't even a correction yet. Let's not forget that. This is just a pullback. But we haven't had a correction in this bull market since gold bottomed well, if you go back just to 3 years, we haven't had a correction. And it's perfectly normal to get corrections. So you think back to 2006, where the price of gold dropped about 30% in a week. Does anyone remember that? I mean, nobody remembers that anymore. It's just a blip on the chart. Now, when you were living through it, it was awful. But it's just meaningless at this point. So these sort of things are normal. The thing you really have to decide is, do I think this is the top, like 2011, like 1980, and we're going to go into the wilderness for another 10 or 15 years? Or is it just a correction? If it's just a correction, you absolutely do not panic and do not even think of selling stuff after they've already dropped like this. And on the other side, I mean, if you really honestly think this is a top, I feel sorry for you, but there's no, seriously, what is the evidence for thinking this is a top, other than the fact that I remember 2011 and I don't want to live through it again? Well, that's, if I may, and that's what I hear from so many people, but if I may, that is not, rational analysis. That's just emotion. So if you analyze the market, what are the reasons to say this is the top? And in my view, there are no reasons whatsoever. The fundamentals are still positive for gold. for people who have been buying gold are still buying it for the same reasons, for reasons that haven't gone away. The valuations of the gold stocks are still very, very cheap. And lastly, and this will be my last, if you look at a log graph, right, okay, so for the last 2 months, we said, oh my gosh, look at gold. It goes up $100 every day. Oh my gosh, another new high. Oh my gosh, another new high. Look at it on a log graph. It is, I won't say insignificant, but it is a small rally relative to 2010-11 and 1979-1980. So relative to the previous blow-off tops, this is a meaningless rally. We only look at it in a log graph. That's what we should always do, because that tells us what the percentage gains are, which is what's important. So yeah, bottom line, I don't think this is a top. I don't think this is anywhere near a top.
As we step back and look at the bigger picture, one thing becomes clear. The gold bull market is far from over. What we're witnessing right now isn't a collapse, but a correction in strength. The market breathes before it runs again, and history reminds us that such pauses often precede the biggest moves. The fundamentals remain unshaken. Soaring debt, rising geopolitical tensions, and a global shift away from trust in fiat currencies all point to one outcome. Gold and silver are preparing for their next surge. So while short-term pullbacks can shake out the weak hands, the long-term holders, those who understand real value, are quietly watching the setup form. This isn't the top, it's the calm before another leg higher. If you've been following the smart money, you know what's coming next. Stay alert, stay informed, and stay prepared. If you found this breakdown helpful and want more insights into gold, silver, and the global financial reset ahead, don't forget to like, share, and subscribe to the channel. Your support keeps us bringing you the truth behind the markets, before the headlines do.